Now, if you're an investor like myself that's looking to grow their dividend portfolio to the point to where it pays them enough money in dividend income every single year and month to cover all their bills and then some, and if you're looking for ETFs that are going to be high yield from the start but offer a positive total return, then this video is going to be perfect for you. Because in this one, we're going to go over 5 different higher yielding ETFs that you probably either haven't heard of or regardless are just much less talked about. These ETFs, every single one of them offer a positive total return and offer a massive amount of income from day one. So if you want to see which 5 ETFs I'm talking about, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first high yielding ETF that is less talked about for sure, I have not really seen that many people at all talk about this one, and every time I bring it up, everyone says I'm gonna look into it. I'm talking about QDVO, this newer ETF that's brought to us by abbvie ETFs. Now, this ETF is probably not that talked about because it has only been trading for around 2 months now. This ETF is from the same provider as DVO, which is pretty popular, but QDVO does things a little bit differently. This ETF offers growth and high income potential, seeking capital appreciation from growth-oriented stocks with high monthly income from option premiums and dividends. Now, this ETF also offers equity exposure and lower volatility because of this covered call overlay. This ETF actively managed has a 0.55% expense ratio, has only literally been trading for a few months, but already after the most recent distribution is offering a 7.03% yield. Now, 7.03% isn't the highest yield across the board, but for an ETF that offers you capital appreciation exposure plus high income, I think it's pretty decent, which is why I grabbed a few shares of QDVO not too long ago. Now also, if we were to look at QDVO on the max time frame, it's only been trading for 0.16 years, so it's sort of laughable to even look at data at this point, but still. The ETF has a 5.95% total return, with dividends being reinvested and being included, or an annualized gain of 36.17%. So a 7% yield, more or less, for a new ETF that offers a high income plus capital appreciation exposure. QDVO is definitely one to look into. Now, the next ETF that we're going to talk about is one that I've talked about a few times, but I almost never see anyone talk about it, and this ETF has some massive performance. We're talking about ZIVB, the 1x short VIX midterm future strategy ETF, the ETF that shorts the volatility index. Now look, I get it, if the volatility index spikes like crazy, this ETF is probably going to see some pain. But if things were to stay somewhat stable like they have been for a while now, this ETF is going to be able to farm a massive amount of yield and performance from shorting the VIX. Now, did I mention that ZIVB offers a 29.24% distribution rate? I know you're probably thinking this ETF has decayed like crazy, like a lot of the yield max or a lot of the other ultra high yielding ETFs that have massive NAV decay. But with ZIVB, it's not that case whatsoever. This ETF is green across the board. It started trading a while back around $15, is now trading around $20. Not to mention ZIVB has offered, with dividends being reinvested, almost 40% average annual total return, and the ETF has been trading for around 1.51 years. Now, even with dividends not being reinvested, we're still seeing a total return of 66%, which, at least to be fair, deserves a look into ZIVB for some investors out there that want some massive monthly distributions ASAP. Now, the last thing about ZIVB before we go on to number 3, this ETF pays around 48.5 cents, or at least has so far since inception. And keep in mind, this is for an ETF that costs around $20. Definitely look into it. Now, speaking of shorting the volatility index, SVOL or SVOL, the Simplified Volatility Premium ETF, also does this. Now, the difference between SVOL and ZIVB is that SVOL also has different things within their holdings. They hold different bond ETFs, they hold a bunch of their other products, and only use a smaller amount of net asset value to short the volatility index. So SVOL, in my opinion, would be sort of the more mild, more chill, tame version of ZIVB, but still SVOL offers around a 15% trailing 12-month dividend yield. Now, if you ask me, SVOL doesn't really get the flowers that this ETF deserves. Sure, the ETF has decayed a small amount in price over the last 3.44 years. But still, with dividends being reinvested, the ETF has offered around a 10% average annual total return, around 40% total return, all for an ETF that offers around a 14, 15, 16% trailing 12-month dividend yield. SVOL is definitely one to look into, and I have a ton of SVOL in my portfolio personally. Now, another less talked about one, I'm not really sure why, this one is one of my favorites as of recently. I'm talking about SPYT, the Defiance S&P 500 Income Target ETF, which offers around a 20% distribution rate. This ETF says it aims to achieve a target annual income of 20% in the S&P 500 using options paid out monthly. They use a strategy that revolves around holding shares of ETFs that track the S&P 500 performance and engage in selling daily credit call spreads of the index. Now, this has the potential to offer some massive yield, which they're aiming for 20% per year, which would be incredible. Now, the distributions for SPYT have been very steadily around 33-34 cents, which I also like because you sort of have an idea, sort of a cadence, and know what they're trying to get to. Not to mention, for a higher starting yielder, SPYT has had an amazing start. It's only been around for around 0.62 years, and a lot of these newer ETFs I'm watching very, very closely, and I personally don't have the guts to invest a ton into these newer names, but I have been buying them ongoingly, and I have grown my position of SPYT over the last few months. Now, SPYT over the past 0.62 years has offered a total return of 12.72%, or this is an annualized gain at the target around 20.43%. Now, even with distributions not being reinvested, we're still talking an 18-19% annualized gain. And remember, this is all for an ETF that has a target of 20% distribution rate per year. If you want something that's focused on income, and at least as of right now has not navigated at all, definitely look into SPYT. Now, the last one that's much less talked about, at least as of recently, for sort of good reason, is our YieldMax ETF, the YMAG ETF, the YieldMax Magnificent 7 Fund of Option Income ETFs, which does in fact have a distribution rate of 62.34%. Now, this ETF is known as the Fund of Funds, meaning that it will primarily invest in assets of the 7 YieldMax ETFs, the fund's names referring to the strategy of gaining exposure to the common stocks of 7 companies, which are of course known as the Magnificent 7. These companies specifically are names like Apple, Amazon, Alphabet, Meta, Facebook, Microsoft, Nvidia, and Tesla. Now, it then says the portfolio will be reallocated on a monthly basis, so that each of the 7 YieldMax ETFs held in the portfolio is equally weighted. Now, I get it, a lot of the YieldMax ETFs are sort of having a bad rep for paying out massive distributions, decaying over time, but listen, this one's a little bit different. Now, first of all, this ETF moved to weekly payouts, which have been massive, at least so far. We're talking 20 cents, 28 cents, 16 cents, 17 cents, 19 cents, but even before then, we're talking anywhere from 57, 67 cents on a monthly basis. And to dig into the actual numbers, over the last 0.72 years, YMAG has been trading for a while now. We're talking a total return of 23.23%, with distributions being reinvested, or around a 21% with them not. Now, either way, this is around a 32% annualized gain, which is not bad whatsoever, and which is why I wanted to include this one into a video, because if you are focused on income, if income is very, very important to you, and if you're anything like myself, trying to get your portfolio to the point to where it pays you a lot of dividend income and distributions on a monthly basis, we'll definitely check around all 5 of those ETFs we went through. So now that we went over the 5 ETFs in this video, I lastly want to hear from you guys down below. If you were to only be able to choose one of them, which one would it be and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.